Everybody, it is Wednesday, June 6th, 2018, and the S&P 500 had a healthy gain here today. As we know, last week we had that noise about Italy here, and as I pointed out, we had the potential from a failed move could come a fast move. We had mentioned a price objective of 275.61, which was hit, and as I always point out, I don't like to have price targets because the market doesn't care about our target. Instead, what we want to do is have an idea at the time to see if the market has the potential to go to a level that feels realistic for our time frame so that we can have a justified trade based on the risk reward. Obviously, the market continued to blast right through that level, and that's why I prefer to let the market speak to us and tell us when to get out by raising our stops. At this point, I had suggested our stop be right here, and as of the midday video. Today, now I'm suggesting worst case stop, probably from an intermediate term perspective, would be below this low here, which is the week to date volume weighted average price in this morning's low. So we're getting a little bit stretched here in the S&P 500, but that doesn't mean it has to turn lower. Same is true for the Nasdaq. The Nasdaq is at an all-time high on a closing basis, and it broke through that all-time intraday high as well. Now we've had four real nice strong up days here, and the market is getting a little bit extended. Don't forget that a lot of times when we see the market extended like this and then it breaks out, often we see that the market pulls back a little bit over the next couple days. That shouldn't do anything to jeopardize this strong uptrend. Again, we don't want to sell short, and we don't want to get rid of our holdings just because the market is up a lot. Instead, we want to look at the time frame that makes most sense for us. And from an intermediate term standpoint, as I always say, you don't want to sell short with a rising 5-day moving average. And I think the reasonable place for a stop should be somewhere in here from an intermediate term perspective. The Russell 2000, as we know, has been the healthier market here for the last several weeks as it's led the overall market higher. First, by finding support at that prior resistance in the rising 20-day moving average. And now we have this market continuing to get extended, but showing zero signs that it's getting tired or slowing down. And if you're trying to short into this strength, obviously no one has done it correctly and is still holding it because we closed right at the high of the day and the high of since existence. So no one who is sold short and is still holding is making money. The path of least resistance is higher. Know where your stops are. Semiconductors also continue to move higher. They're looking like maybe they're going to head for the all-time highs here as well. It's certainly extended, but again, that doesn't mean sell short. It doesn't mean sell your longs. We have a rising 5-day moving average. It's innocent till proven guilty. Those financials have been really the weaker group, but we have been holding above the volume weighted average price since Italy. And then we saw that that was tested as support last week, and now it's recovering a little bit better, but still on the daily time frame, as I mentioned, we're in this bigger box where nothing's really going on. I think that maybe over the next week or two we rally up towards this level pullback, and then perhaps the financials could continue to move higher. But overall, the markets are in strong uptrends. Just be careful not to chase things that have already moved. I get people asking me all the time, "Hey Brian, what do you think about this stock?" And they point out a stock that might have been up 10% in the last 3 or 4 days. And then the next day it might go higher, but you have to think about what are the odds, what's the risk reward, and do what's right for your time frame. But risk management is always job number one.